Very good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. There are many people, those who regularly WhatsApp us, message us, tell it, LinkedIn, Twitter, that should we invest in this IPO or not, and so on and so forth. Although on our YouTube channel, we already shot a video that what all factors that you're supposed to keep in mind before investing in initial price offer by any company, whether in India or outside India. But having said that, when we speak about India, in India, we have a market called gray market. And I really don't understand what exactly is the composition of the gray market because no one know how exactly the gray market works, and no one knows that who actually heads the gray market, who is that person. Like, before any IPO there are variety of circulations that are there in the public domain. This IPO is priced this much in the gray market and so on and so forth. I don't know how can you even give that pricing. As far as the investment banking is concerned, I really fail to understand because investment banking is done using book building, and book building is a diligent process. By the time book building is not done, how can you even come in public and say that, you know, this is what the gray market is projecting, you should buy that price? To be honest, sometimes I feel that due to these rumors and circulations, and especially retail investors who started investing in such kind of stocks because the gray market is pricing this. So it's a kind of backtracking, to be honest, which is happening. I don't know till what extent you understand the backtracking or not, but in this video, I try to explain you how exactly the backtracking and how these things work. I hope you understand this video very well. Thank you very much. And this is again Rahul Magan from Treasury Consulting. Have a great time ahead. Thank you, sir. Very good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Today we would be speaking about the Indian IPO grey market. Now, first of all, I have already clarified to many people that IPO means initial public offering. Don't worry, this is only in the books, which means that the company is coming in the market for the first time. So in today's video, I am going to be taking a live example of a company, and I am just assuming a very hypothetical name. In case this name is really exists, then this is purely a coincidence. By the way, I love this name. Ram Lal Samosa Company. In this, if this name really exists, it's purely coincidence. So Ram Lal Samosa Company is really a company who make very good samosas, and they sell samosas not only in India, having and but they also export also samosas. So currently they are having set up in in all four part, which is West India. They have set up in West India. They have, you know, set up in East India. They are having set up in North India. I'm assuming they are having set up in South India. So we have a company whose name is Ram Lal Samosa Company. This company having branches in all parts of India: West India, East India, North India. Assuming, we are simplistically assuming that their revenue is even, which means that 25% of the revenue is coming from each of the, I would say, locations. So I'm making a case very simple. Now, Ramlal Samosa and Company wanted that this is the scene of the Ramlal Samosa and Company. So Ramlal Samosa and Company is having two proprietors. Number one is the Ramlal, and number two is the Rooplal. Both are brothers, real brothers. And the scene is like that: 20% of the stake is with him, 20% of the stake with him, rest stake is with the banks, those who funded this company. Around 30% stake is with the banks, and fourth, the private equity and venture capitalist. Around 30% stake is with private equity and venture capitalists. So this is the scene. We have a company, Ramlal Samosa. There are two proprietors, Ramlal and Rooplal. Both are brothers, both own 20%, while banks who funded 30%, private equity 30%. Today the scene is like that. The annual sales is around 10,000 crores, while the net profit, which is also known as PAT, is around 1500 crores. The total debt in the books of this company is around 12,000 crores, which is owned by banks. The total capital is around 25,000 crores, out of which 30% of the capital is by private equity and the venture capitalist player. So this is the scene of Ramlal Samosa and Company. All of a sudden, there is a news which is coming in the market that Ramlal Samosa and Company is looking for IPO, and they are looking forward to come in the capital market and raise the money. Very good. What happens? People have very limited knowledge. People will not do any kind of, they have no patience. What people do? They will simply go and they will say, we should buy Ramlal Samosa and Company. But there are important factors that we need to consider while we are talking about this. Number one factor is that company is having private equity and venture capitalist? Oh my God. Yes, they are. Are they quitting? This is no. If they're not quitting, okay. Are they quitting? Yes. That private equity is quitting. Are they quitting 100%? Which is the 30% they owned? Yes, they're quitting 100%. Which means that this is called secondary offering IPO. What would if private equity and venture capitalists is not quitting? This is called primary offering IPO. Now the question is how much money they are raising. Assuming Ramlal Samosa and Company is offering 15,000 crores. Basically, they wanted to raise 15,000 crores. Okay, no problem. But there is a consideration. First thing the investor need to understand is the private equity and venture capitalist quitting. Second thing the investor need to understand is the money which they are raising. Is this money is greater than the sales of the company or is less than the sales of the company. That's very important. Majority of the time people feel that it doesn't matter. It really matters. If your sales is 10,000 crores and you are raising 15,000 crores, which practically means that you are raising this money for multi-purpose. If your sales is 10,000 crores and you are raising 5,000 crores, it also raises a red flag. But if your sales is 10,000 crores and you are raising only 2,000 crore, okay, no problem, not a big deal. Third important thing which people need to understand is the research of the IPO. Now, when we speak about the research of the IPO, then strictly speaking, in Indian context, research can be done in three parts. Number one, the paid media. Number two, the brokers, those who comes in public domain and say you should buy. Number three is gray market. Number four, and very important, is own. This gate is closed because 99% people do not take that route. They believe that who do the research, who have the time, who look the balance sheet, who look at all these things. We don't have time. You know how media works, how they give the hype. You know how broker works. I have hardly seen any IPO in India who is not recommended by the brokers. From SBI cards till now, I have not seen, hardly seen any IPO who is not recommended by the brokers. There is a standard line the brokers have set, and every time, almost every broker is repeating the same line, to be very honest. Like you should buy, you should buy. In fact, today when I was viewing through Google, I got to know that some great people said that you should buy even at 50,000 Sensex and have a faith in the Indian story. Absolute stunning. If you buy at 50,000, it means you are expecting Sensex to touch 60,000. It's a common sense. If I'm buying at 50,000, it means I'm expecting Sensex to touch 60,000. This is quite a common sense, to be honest. So, and recently we saw what had happened in the paid media. So I'm not disclosing that. Brokers, I have told you. Now this is important, which I'm going to be discussing and how exactly it works. Every country of the globe is having two types of markets. One is known as, let me write, one is known as the public markets and one is known as the private markets. Private market, sometimes also known as gray market. Now what happens, Ramlal Samosa and company is coming up with IPO of 15,000 crores. This gentleman is giving a hype to that IPO. But unfortunately, this hype, people are not accepting that hype. People think we are not accepting that hype. Now what happened, there is a message, very simple, which will come on the WhatsApp of most of the people and which is by the gray market, which is that this stock will open with a listing gain of 50% minimum. Who computed this 50%? We don't know. How it got computed? We don't know. Any source of research? We don't know. Any person who computed this? We don't know. But there is a simple WhatsApp message will flash across India that there is a listing gain of 50%. Super. Then the retail investors, those who are there, who earlier ignoring this, I would say this IPO, they start investing. Now, once they start investing, what happens? The IPO will go up, and within few hours, it would be 3 times or maybe 5 times subscribed. Then there is a flash which come on the media. And what is that flash? Ramlal's Samosa company is 5 times subscribed. I am the person who not subscribed for it. I will think, till yesterday it was subscribed only 40%, which means even not complete. Only in one day it is subscribed by 5 times. It means that there is something which I am missing. I have no confidence on my skill. I will never do any research. This news immediately flashed in the media, and what I said, I call my broker. Hey guys, how much is the one lot? Okay, this. Invest. What happened? Slowly, by the time IPO closed, this is 12 times, in some cases 15 times, in some cases more than that. Now what happened? The whole credit goes to this message which comes on the WhatsApp that it will open 50%. Just imagine if today there is a news come that this bank is going to get bust, XYZ, everyone will go to the ATM and withdraw the money. Even if this bank is not going to be get bust, it will get bust, because all of a sudden where they arrange the money. This fake news can trigger anything. Now what happens? I was not interested in investing, but I invested because I saw in the media that almost 15 times it got oversubscribed, so let me invest. Now here comes the catch. And that I'm telling you, please note this. Ideally speaking, in investment banking, there are 3 kind of auctions which are done. Number 1 is the Dutch auction. Number 2 is the English auction. Number 2 is the French auction. Generally speaking, in the countries like India and Southeast Asia, this auction is preferred. Now, which means that I will look at the rate at which I get the maximum subscription. Since on the very first day it was subscribed 40%, on the second day it was subscribed 5 times, and on the third day, the final day, it is 15 times. Now there are 2 prices. One is known as base price. One is known as cutoff price. There are people, those who put bidding here. This is wrong. There are people who put bidding here. This is correct. There are people who put bidding greater than cutoff price. In case of Dutch auction, the probability of people getting allotment is here, who offer greater than the cutoff price. And this is exactly what the gray market want. Because if they circulated this WhatsApp message only because they want people to invest, this is exactly they want. And they got it. Now what happened? It is really simplicity. When the listing day will happen, share price will zoom up, maybe say 50%. And you know who quits first? Who quits first? They are the people who quit first. Not all institutional investors, but few. And who not quits is the retail investor. In this whole story of initial public offering, we never ask the four questions from the company. Number one, you have a huge debt. How you would be handling this debt? Today also one startup busted. Today also one startup busted who was unicorn. Why the venture capitalist and the private equity player are quitting your company? What is the reason behind that? Why they wanted to quit your company? Number three, is that business model of selling samosas, is that business model is really a profitable business model? Is there is any competition we have in this company? Future competition will come and so on and so forth. Number four, and very important, why the venture capitalist and private equity is quitting if the company is profitable? The whole culprit is the gray market. No one ever know who is gray market. But only on the one WhatsApp message, everybody started buying. Everybody started buying this without even doing due diligence or research of that. I hope you understand how the IPO market in the India works. And in 2021, many unicorns are coming in India in the IPO market. Those who never saw profits. And I'm sure they will seriously get a super hype. This video is by our investment banking desk. Our investment banking desk having a lot of courses, and to be very honest that there are a lot of courses are coming in the investment banking. If you wish to have any questions, this is my personal number. And this is our back office number. Have a great time ahead. Next time, before you do any allotment in any IPO, just remember these four questions. And if you get any WhatsApp messages of the gray market, just think that, is it really fruitful to understand, to have to pay attention to this WhatsApp message without even knowing who is sending this? As simple as that. This is Rahul from Treasury Consulting. Have a great time ahead. Hey guys, please do not forget to subscribe our YouTube channel. You just need to click on the subscribe button, and please do not forget to like the videos. And at the same point of time, we mentioned our WhatsApp number of our back office. If you wish to have any query, then you can mention on this number and our back office would be replying you definitely.